Hi friends, welcome back to Stockwood channel, a channel where we discuss investing strategies with facts. So friends, as you would have seen in the thumbnail, in today's video we'll be discussing about the banking sector in India, and I'll be dividing this video into different sections where in the first section I'll be discussing about how the banking sector in India is broadly classified and what are the policy changes that the government has initiated in the recent times, and what are the growth prospect of this banking sector in India. All right. So before we get further into this video, a humble request for you to subscribe to my channel and like this video, so that is encourages me to come with more such videos in the future. The first section will discuss about what are the different segments within the banking sector. So the banking sector in India is broadly classified into 5 segments, that is majorly the public sector banks and the private sector banks, and also there are the smaller banks, which are the small finance banks and the foreign banks and the rural banks. If we see the split of these banks in a pie chart, in terms of the number of banks, the public sector banks is have only around 8 to 9%, but majority of the activities are with the public sector banks. Almost 50% of the deposits or the loans are with the public sector banks, right? Also the private sector banks, which forms almost around 16%, is also catching up in the recent times, which we will see in the subsequent slides, right? Then if you see how the sector is performing compared to the developed economies like US and UK, the country is still seeing under-penetration in terms of banking activities. In the recent times, there is a good or a substantial increase in the number of deposits and the deposit amount in the banking sector. But in terms of loan, it is still at a very lower ratio compared to the developed countries, which is around 15% of the retail loans compared to the GDP ratio, right? In terms of the developed economies, it is almost 80% of the loans, retail loans, to that of the GDP. So there is a huge under penetration in terms of retail loans, which we can see that there will be an increase in the coming days. And also in terms of policies that the government has taken in the recent times, you might be aware that there is a good consolidation of various public sector banks, which may be in terms of State Bank of India merged with its sister companies almost 2 years back, and there are also some of the banks like Bank of Baroda and Vijaya Bank and Dena Bank getting consolidated into one bank. Right, this kind of consolidation actually gives an advantages to the consolidated bank in terms of better governance and removing of unnecessary cost in running multiple banks, right? And also in the recent times, the government has infused capital money into the banking system through bonds, and also there is an improvement in the governance structure of the public sector banks, right? And also recently there was a lot of news about the creation of the bad banks, which will help in these banks to clean up the NPAs and the stressed loans, right? With that understanding, let's see how the growth in deposits have been growing in this sector, right? If you compare to FY18 and FY19, where the deposits were almost around 1,300 to 1,400 billion dollars, it has seen a substantial increase in FY20 to almost around 1,900 billion, and currently in FY22 it is around 2,100 billion dollars, right? I have another interesting graph on how the deposits are growing between the different banking segments, right? This data is between 2011 to 2017. I think this trend has continued in the recent times also. If we see this particular snapshot in FY11 and 12, if the overall deposit growth in the banking sector was around 12.78, it was equally distributed between the public sector banks and the private sector banks, right? The growth was even between the public sector and private sector. But if you see the trend in FY17, where the overall growth in deposits in the banking sector was almost around 11.78, the private sector deposit had grown almost to 20%, while the public sector had a growth of only 10%. Right, this shows the trend of the private sector banks are taking good market share in terms of deposits. So let's see what is the difference between the public sector and private sector banks, right? So one major difference between the public sector bank and private sector bank is in terms of investors, right? In the public sector banks or even the rural sector cooperative banks, most of the shareholding is with the central or the state governments, right? While as in private sector banks, most of the investors are corporations or individuals. Other major difference is in public sector bank, the FDI investment is capped at around 20%, while as in private sector it is allowed up to 74%. Another important difference here is in terms of the adoption of technology. It is clearly seen that the private sector banks are leading in terms of deploying or implementing the newer technologies. One advantage that the public sector bank has is in terms of trust the public has. You would have seen that most of the people trust the public sector banks like Canara Bank or State Bank of India compared to HDFC banks. So there is a huge trust deficit that the private sector bank has, but in the recent times I think that is slowly reducing in the Indian public. So with this understanding, let's see which is the good bank that we can invest in short term. All right. So if you see the price chart of this particular bank, it has given compounded returns from the year 2017, from where it was trading around 700 rupees. Now it is currently trading around 1700 to 1600 rupees. If you see a price chart of this bank for the last 6 months, it has corrected almost by 20% from the highs of around 1700 to 1500, where it is currently trading near to the 50-day moving average. Right, so let us see the quarterly results, how it is being doing to see the fundamentals of this bank. Right, the fundamentals also are looking good. If you see the last 10 quarterly results, it has the top line and bottom line are continuously improving. Right, it was almost around 28,000 crores in March of 2019. Now it is around 34,000 crores. Right, and this bank is also doing profitably, and the bank name is HDFC. Right, so this bank you can actually use as a swing trade in the coming days. I am hopeful that it will reach its peak again in coming days, maybe in 3 to 4 months. But if you want to have it for a longer term, it may not give you a multi-bagger return, but it's still a good stock to be in your portfolio. So if you are looking for something which is give a multi-bagger returns, and if you have a risk appetite to take, there is a private sector bank which has a market cap of only around 26.8 thousand crores, and the ROCE and ROE is not very impressive currently, which is around 6.24 to 2.24%. Right, but if you see the quarterly sales and profit, it is very encouraging. Almost the quarterly sales has improved by 8%, and the profits also has increased or doubled quarter on quarter. Right, if you see more about this bank, aspires to be a world-class bank in terms of providing better services to customer and to increase the profitability of the company, and also to implement cutting-edge innovations in the bank, and also to give a high return on equity. Right. And in terms of the business of this bank, it has primarily been in the retail sector in terms of the prime business in home loan and car loans, and also has developed specialized products for the rural segment in terms of financing the artisans, large and medium and small farmers, and automobile spare part owners, and tailoring and such smaller retail businesses. So if you see the footprint of this particular bank, it is spread all across India, except the northeast, where it has a lower presence, but it has a good presence all over India. And also, if you see the urban rural mix of the branches, almost 37.5% of its branches are in the rural branches, compared to HDFC, where only 18% of its branches are in rural sector. So this gives a competitive advantage for this bank to gain more customers and have a growth potential in the near and future period of time. Also, if you see the quarterly results of this particular bank, it is not very encouraging. The top line is almost stagnant or a very small growth from around 3,600 crores in March of 2019. It has grown only around 4,400 crores. Right, and also the profits have not been very consistent. There are quarters where it has been in negative, and some quarters have turned positive. Right, majorly this is because of the provisioning that they are making. If you can see that in the financing profit, where they are making the provisioning for the stressed or bad loans. So the bank is quite transparent in terms of showing that they have stressed loans or bad loans. They are making a good provisioning. And also, if you see the shareholding pattern of this particular company, the promoters have a substantiate holding, and also FIs and DIs have invested in this particular bank. So the bank which we are talking about is IDFC bank. So to know a bit more about this particular bank, this bank was founded by the merger of IDFC bank and the Capital First Bank, and it was formed in 2018. Right, and because of the some of the bad loans that it had from Capital First Bank, there is a lot of provisioning that is happening, that is majorly in the corporate loans, which has turned into bad loans. But since the formation of IDFC First Bank, the bank has clearly identified that it want to concentrate in the retail sector, where the substantial amount of business or the customers are in the retail sector. And also it is led by V. Vaidyanathan, a very reputed person in the banking sector, who had worked in Citibank and also been part of ICICI in turning that into a DFI into a commercial bank. Right. So friends, this was a short video about IDFC Bank. So if you like this video, it will encourage me to come with more such videos. Thanks for watching. See you in the next video.